And good morning, everybody. Big show on the morning show today. First of all, it is Friday, which means it's Crypto Friday. Duh. We're talking to Louis Sykes, our resident crypto expert. He'll be on with his charts in a few minutes. We've got Jeff Hirsch on the show today. He is the editor. He is the publisher of the Stock Traders Almanac, the guy who writes the book on seasonality. He'll be on the show at 9. We'll have Alfonso, our chart wizard, coming on to share some of his favorites at around 9:30, 9:40 or so. What else is on the radar today? We're talking about big winners of in the universe of the Russell 3000 from the past couple years. We have a nice, pretty scan we put together for you. We're talking, oh, look at that jobs number just came out. I know at least a couple of you care about the jobs number. That looks like it was a nice beat. Look at that. Better than expected on the jobs. All right, cool. So a lot going on. Busy day, fast market. Hit the like button for me, please. I got Steve here. I got JC here. Let's go.
All right, Mr. Spencer Israel. Happy Friday. Happy Friday there, Mr. Strazza.
So, how'd it go yesterday? City man?
It's a lot of food. A lot of food.
Where did you eat?
Where didn't we eat? Oh my God. Multiple dinners, 14-course lunch. I mean, it was a lot.
It looked like there was some Italian happening.
It was Italian happening. They ordered the whole menu. It was like lasagna, this pasta, that pasta. I mean, it was wild. It was a bull market dinner. There's no question. I've been to a lot of dinners in my day. We were ordering Super Tuscans and Vino Novi de Montepulcianos 2 at a time. Like, just keep them coming. They were actually pretty well priced too. It's aggressive.
Okay.
I went to a kosher omakase for lunch.
Huh?
Kosher omakase. Even the sake was kosher.
Never heard of that before.
You know, because they're kosher, they're limited to what they can serve. There's a lot of stuff that a normal omakase would serve that they can't, obviously, on the shellfish and things like that.
Yeah.
So that was kind of a bummer because I'm not kosher. I don't give a shit. It just happens to have been a kosher restaurant, right? Obviously. And but I will give them credit for being really creative with what they did with what they could serve, you know? Like salmon belly, salmon a few different ways, tuna like 4 different ways, you know, all toro, true toro. Like, you know, they could do, but like no uni. You know, how do you have an omakase with no uni, no crab,
right?
No shrimp,
no shellfish, no bottom feeders, nothing like that.
Yeah, no like squid or oyster or anything like that. So, listen, it was cool. Like I was the only Gentile that was in the whole place. No question. But it was a cool experience. I'm into it. Like I'll never do it again, but it was something you could do once. There's just no reason for me to do it. Like I'm not kosher. I don't give a damn. So why would I do it? Why would I sacrifice the uni?
I'm trying to think,
because thousands of years ago it was near a pig or something, whatever
I'm trying to think who is though.
Who's kosher?
Like who did you go with?
I went with Rachel.
Really? Rachel's kosher?
No.
So why didn't you just do a normal omakase?
Because if I'm gonna hit every omakase in the city, I got to go to the kosher ones too.
Oh, I didn't realize this was like a bucket list thing for you.
Okay.
Yeah, this is what I do. You think it's a coincidence every time I'm in the city I'm at an omakase? You think it's just random?
I don't know.
No,
yeah, it's thing.
It's surely by design.
Yeah, it's definitely by design. So I was supposed to go with Fami, but Fami was too busy. So I'm like, Rachel, you want to have lunch? She's like, hell yeah. I'm like, all right, done.
Fami was busy hanging out with rock stars as usual. How did you guys do on the pod though?
Good. I mean, you know, nobody can get a word in. Everybody's yelling at each other. I mean, you know.
JC sent me such a classic picture last night. I mean, we should maybe even show it on here.
Which one?
They're both just dying.
One of the guys doing this.
Put it up.
Head in their hands, like. And I was thinking to myself, I can only imagine what he just said.
Actually, it wasn't me. It actually wasn't me.
It probably ended in Polish zloty.
No, it was because Fami brought a chart of Microsoft from 1990. that looked like it had been like faxed over.
Wait, I can't find the picture. Where is it?
I
know I saw.
So that's why it wasn't me being obnoxious. Believe it or not. All right. I like how that's your assumption.
Yeah, I figured you just said something crazy again.
No, it's that Fami brought a chart from Microsoft from 1990, like pre-split, like just wild. Like these guys were like, "What the fuck is this?"
Fami uses the IBD, I believe, still, right?
Like the William O'Neill stuff, you mean?
He uses IBD charts, does he not?
Oh yeah, I don't think they're called IBD charts. They're called something else. Market Smith. Yeah, but yes is the answer. Yeah, totally. But listen to the podcast. The podcast is out. I actually haven't heard it, but I was there. It was funny.
I'm gonna listen.
Yeah, it was good.
Oh yeah,
take a listen
this weekend. Listening for sure.
I did the country thing, and where I ripped through all the countries.
Good.
I figured that was good and they told me afterwards that they enjoyed that because their audience doesn't get to see that. Josh was like,
right.
I didn't realize there were that many countries that had exchanges.
You do. I think the same thing sometimes. Who said it on here? Like, are there other countries? Who asked you that?
No. Well, their intern, we were having dinner and they brought the intern and he's like, so why does it matter, all these countries?
That's a great question. I wonder that myself every day.
Well, in bull markets, you get an expansion in the amount of stocks that are participating in the bull market. You get stocks making new highs. You get more sectors participating and making new highs. You get more industry groups participating and making new highs, right? You also get more countries participating and making new highs. That's called breadth expansion, right? That's what you see in bull markets. In bear markets or deteriorating markets that are transitioning into bear markets or maybe massive corrections or whatever, what you're going to see fewer countries making new highs. You're going to see more countries making new lows. Just like you're going to see more sectors and industry groups and stocks also making more of them making new lows and fewer of them making new highs. The countries is part of the breadth analysis. And then you could take it one step further and be like, okay, these countries are really doing better than those countries. What types of stocks and industries are in those particular countries that are outperforming the others? And you could see whether they're driven by technology or whether they're being driven by mining, or healthcare or industrials. A lot of these countries have financials exposure. So, that's less a part of it. It's more the other stuff, in my opinion. So that's why it matters. And it's whether you're going to trade these. First of all, half the New York Stock Exchange are stocks from outside the United States, first of all. So if you just don't look at those stocks or don't trade those stocks, you're like, you're missing out on a lot of potential opportunities, right? And you could trade them on U.S. exchanges in the same way you could trade U.S. stocks. So that's first of all. Second of all, let's say you are never going to trade a stock that is not based in the United States for whatever weird allergy that you might have. There's still information there that you can use and be like, hey, the countries with a lot more materials exposure are outperforming. Maybe I should look at material stocks. And what you'll probably find is those material stocks are probably outperforming some of the other sectors in the United States. So you could derive information from elsewhere, different parts of the world, and bring it back home if you truly are allergic to investing in countries that are not based in Texas or whatever,
Okay.
Say about that. Was that a good answer? Was
Good
that
answer?
I have nothing to add because you explained it very well.
Yeah.
Does that make sense? So you see, like, we're not like wasting our time or like, like if you're not into like the Stockholm 30 index, like, maybe you should be a little more into it.
Cool. All right.
Analysis.
What I gotta say about that? Why don't you hit that bumper? Hit it. So I want to just do a quick rundown. So jobs numbers came out. I'm not sure if they're the farm payrolls or the non-farm payrolls or neither, perhaps. I don't know. Maybe it's an ADP.
It's a non-farm. It's always a non-farm. You know this.
Is it non-farm? Isn't there like an ADP thing that comes out too sometimes?
That's on Thursdays.
That's on Thursdays. Got it. And today's Friday. Okay, Dow futures down 175 points, 45 basis points. S&P futures down 50 bips, about 20 points. NASDAQ futures down 50 bips as well, about 80 points. Bond futures down again. Stocks and bonds continue to trade together. We're watching it every day. 30-year bond futures down 1%. Gold down 75 basis points. Silver down 40 basis points, down to 23. Copper down 0.5%. Oil up 1%. And the dollar rallying with stocks under pressure once again. And volatility inching higher with yields back above 4%. And then, of course, in the old funny money, let's take a look at what's going on here. So in the old cryptocurrency world, we are seeing, come on, we're seeing the old Bitcoin down 300 points, down just under 44,000. We're looking at Ethereum this morning down 1% to 2240. And of course, the old Solana back to 100, down 4% on the day. Total crypto market cap down slightly, about 1% to 1.62 trillion. And for those who are into dog coins, the Doge down 2% today. Spencer, are you gonna make it?
That's unchanged as far as I'm concerned. So
the Doge, it's true.
2% unchanged.
So Santa, no show for the Santa. Looking forward. The fact that we have Jeff Hirsch, like 2 days after the Santa Claus rally period. Fantastic job with the scheduling, Spencer. I'll give you the credit, even if you don't deserve it and somebody else's idea. I'm going to give you the credit. You get it. Good job, Spencer. Right, Strazza? That's a good job.
All right.
No,
cool. Sure.
Are we giving Spencer too much credit?
Yeah, it was definitely his idea.
Oh, look, man, I just work here. All right.
No, it's good. Listen, obviously, we're going to have Jeff on after all this January stuff.
Well, for us, yeah, because it's obvious to us. It's not obvious to other, media outlets.
You know what, though? There was a question from Bill in the chat that we'll save for Jeff, which is more important, Santa Claus rally or the January effect, right? So, great question for Jeff.
Yes.
We were with Emily last night. Emily works in, she's in Fox. She hosts her own show. I had never met her. She's good friends with Fami. So, I'm picking her brain about what she does and what she talks about on her show. It's like politics. Emily Compagno. She's really cool. Sicilian from Oakland, California. And her father owns a winery. I sat next to her at dinner. We had a great time. So anyway, so I'm talking to her afterwards, and, she actually hosts her own show on Fox. Like, they get a lot of traffic, all that stuff. She's telling us going on and on. She's like, what about you guys? I hear you guys are celebrities. And I was like, no. Maybe in a small group, of nerds somewhere in this world, we have this little niche where, we have somewhat of a following. Literally, as soon as I finished saying that, a couple of guys come up to me and Fami were like, hey, guys, we're big fans. Like right on cue. And it was just, some young guys who follow the show and everything. It was pretty funny. And Emily's like, what am I, chopped liver? She's like gorgeous, right? Like it's just me and Fami over here.
It's fun. So I got one of my close golf buddies. We've golfed together 20 times. He calls me the other day and he goes, dude, you didn't tell me you were famous? Because we don't talk about it. But he was Googling for crypto stuff and he stumbled upon us on YouTube and he called. He's like, you got to tell me what to do with these cryptos.
Yeah. Like 3 years of living in Sonoma, like, my wife and I, we were just always around. We had no kids. We had nothing to do. So we were just at bars, wineries, dinners. We were just always around. And it's a small town. So everybody knows each other. Nobody ever asked me what I did for a living because nobody gives a shit out in wine country. And one day, like, I guess I was on TV or something. And they're like, what the hell were you doing on TV? What do you even do?
Yep. Yeah.
It's funny. It's funny because I don't talk about, it's better to tell people you're a plumber. All right. So I have, I want to go over something important here.
And then we have Louis here, just so you know.
And then we have Louis because it is
Crypto Friday.
All right. Yes. All right. Okay. So I want to just go over these, five before the nosedive, right? You like
so somebody suggested, I don't know if you saw it or not, JC, you had a busy day yesterday. Someone suggested that we called these indexes the Fab Five. And I said, I kind of like it.
We're just going to take that from Michigan?
Yeah, nobody remembers.
What do you mean nobody remembers?
Statute of limitations. It's been 30 years.
You want to know a fun fact?
What?
The Chris Webber timeout was April the 5th of 1993.
So
do you know how I know that?
31 years. Boom.
Do you know how I know? That's a fun fact. You know how I know that, Spencer Israel?
April the 5th of 93. What? Man. No, I don't have a guess.
The reason I know that is because on that very same day, you were at that game, PJ? That's cool. I was at the first ever Florida Marlins game. Charlie Huff versus Oral Hershiser, the inaugural game. So we have the newspaper framed from the next day saying that, the Marlins won their first game ever. And then on the bottom corner, it's Chris Webber calling timeout.
Wow. That's cool.
Isn't that funny?
That's really cool. Yep.
Yeah. So
anyway, back to the
so
Fab Five.
I don't hate the Fab Five, considering we're talking about a potential, nosedive. The Fab Five blew it, right? So,
Are you really?
I guess makes sense.
You're really going to come on here and use the term nosedive?
Five before the nosedive? No. Alive? The five that keep you alive?
Let's clarify though. What's nosediving? What nosedive? What are you talking about? Nosedive.
If you are positioned for a severe correction in the equities market, US or otherwise, these 5 charts, in my opinion, will prove that you are correct. However, if you are positioned for further appreciation in said equities market, then I would argue that these 5 charts will confirm that you are correct. So regardless of whether you're bullish or bearish, regardless of whether you're spending your time looking for stocks to buy or spending your time looking for stocks to sell, the Fab Five, if you will, I think are incredibly helpful in this particular environment. Like yesterday on the podcast, the podcast was great. Compound and Friends, Josh Brown, Michael Batnick, and it was me and Joe Fahmy. Joe Fahmy was talking about how he manages risk with like a 50-day moving average, and like that's great. And he uses that for every environment. For me, I think that in different environments, there's different ways to be able to quantify and be able to analyze whether, in fact, we are heading towards a more severe correction or whether, this is just a pullback within an ongoing uptrend. I think in this particular environment, these 5 charts are the big ones. So let's go over them really quickly. Technology, this represents almost a third of the S&P 500. It's half the NASDAQ 100. So we are hold on, Spencer, you're getting ahead of yourself. Don't overshoot. This is technology breaking out to new all-time highs above the former highs from late 21. So if technology is above those former highs, it's really difficult to make a very bearish case, right? Now, if this is a massive failure and we break below those levels, now you could the extreme bear case becomes more valid, right? And I will be more open-minded to a more severe correction. That's number one. Next one, homies, right? Same exact thing. We got back to those former highs. We corrected it in the third quarter this year, then just broke out over the last couple of months, making new all-time highs. If homies are above those former highs, it's tough to be overly bearish, right? I need to see a failure to be more aggressive from the short side, raising more cash, things of that nature. Next. Broker-dealers index. This was not in my original Fantastic Four, right? But Strazza and I were discussing it, and we agreed that we're adding it to make it a Fab Five. The broker-dealer index, I don't need to explain to you why this is important. Same thing. Just broke out back above those former highs. Again, if broker-dealers are above those former highs, tough to make a super bearish case, right? Next. Semiconductors, right? Do I need to explain why this is important? Same story. Got back to those former highs this summer, corrected in the third quarter, broke out over the last couple of months. If we're above those former highs, again, tough to make an overly bearish case. We want to be buying pullbacks. And then last but not least, my daughter says that now, by the way. She's 3 years old. She goes, and last but not least, I'm like, excuse me? So industrials historically have the highest correlation with the S&P 500 among all S&P sectors. So obviously important, and we are back above those 2021 highs, making new all-time highs. Again, we're above the 21 highs, tough to be overly bearish. So if you are very bearish and you are betting on severe downside for equities, these 5 charts breaking back below those former highs, invalidating these breakouts, would be step 1 to you actually finally being right.
Yeah.
Am I making too big of a deal about this, or would you agree that this is a good
it's a long list.
Responsible way to look at the list?
It's a long list, and
5?
I think,
is it long?
Yeah, and it's a little bit tough for me because on some of these home builders, even or semis, you're like 5-10% away still of this nosedive you're talking about. So to position for them to undercut the old highs and break down, I think you already need a decent move. Listen, they all work. I like 200 in Russell. We're already back in the box. It's already a mess. And so then that has to prove itself and get back out of the box, right? So I kind of like on strength confirming that the corrective action is over. They're all going to work. If this thing gets ugly, I think the correction has to get pretty ugly for these to all break down, I guess is my point. Things are getting
it's all
ugly.
about listen, it's all about time horizon, right? What's your time frame? From an intermediate term time perspective, looking out months, I think this is a good list.
Chad asked a good question too. Is it all or none? Does it have to be all or none?
You're weighing, and that's why 5 is a lot for me.
Yeah, you're weighing. Like, how many are you starting to check off? Oh, this one broke down. Now this one broke down. Like, when they start to add up, and my suspicion is they're going to happen within a few days of each other. So you're not going to have to wait that long. If that's going to happen. If they're just correcting and just kind of chilling and then breaking out to new highs, we also want to be counting those, right? Oh, homies are making new highs, right? What about semis? What about industrials?
Okay.
You know that they we were talking about the Dow transports, and I called them trannies, and Josh was like, no, we can't say that.
The YouTube looks for that, right?
I don't know. I mean, so you know what he told me? So he says that CNBC came down and told them, they're like, all the old school guys, like, they're just the transports, they're called the trannies. They've been called that forever. I'm not making it up. And CNBC told Josh, they're like, can't say that anymore.
Can we still say it?
We can do whatever we want.
Yeah. That's
tough life. All right. I'm bringing Louis on.
Cool.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Hey, good morning, guys.
Louis needs a longer bumper. It's too short.
Hey,
longer bumper.
I like it.
Okay.
Longer bumper for Louis, right, Strazza?
I don't like Alfonso's either. We got to do better. How's your avocado toast treating you this morning, Louis?
Great. A little bit sleep deprived. Drove into Wellington last night, so finally happy to be back home.
You got your flights?
Flights for New York. I've been pressing Danny on that, so
what are you
we'll see
waiting
if
for? If
What is
Danny's
Danny
slowing
waiting
you down,
for?
you tell me. I'm gonna smack him upside his head.
Louis, just go ahead and I'll message you after the show, provided you're awake.
So we're gonna tell Louis that to meet us in certain neighborhoods in Brooklyn, and then we're just not gonna show up, and he's just gonna be standing there looking for us, right?
I got to book
some white, in the middle of some random suburb. I love it.
Yeah, there's this
Completely
neighborhood called Bed-Stuy. It's lovely this time of year. You should go hang out there. And then when you're done there, you go to Jamaica, Queens.
What's the weather like at this time? Yeah,
Cold and
freezing, isn't
shitty.
it?
Terrible.
Yeah, it's cold. It's terrible. It's January. Come on. What do you know?
I mean, it's summer over here, so it's great.
Can you tell me, is this crypto winter or just New York City winter?
I don't understand the reference, but hey, look, there's definitely no crypto winter in sight. It's difficult to call it a crypto winter.
Right.
You've got a failed breakout recently in Bitcoin. If you want to talk about that,
I think we should. Hit it, Spencer.
Well.
I'm getting texts about helium miners live as we talk about this. Just
God,
sentiment.
Like it. Hit it, Spencer. That's a great bumper. You got Julie in there.
I love that one.
I don't think Louis makes the crypto bumper. What's that all about?
Hey, we need to get some V-roll when I come up to New York.
You got the hair, so you match with the girls with the hair, So
right, chart on.
Yeah, we got 5 minutes here. Talk about these cryptos.
Bring it.
Louis, go.
Tell me about this failed breakout that you speak of.
So a failed breakout in Bitcoin here. So pull up the chart here, Spencer. So you've got Bitcoin that's been trading in an uptrend recently over the last few months. It's consolidated. We got a breakout into the new year, and then we've failed. At the same time, RSI has been making a lower low, a lower high rather, with a 14-day RSI, and so potentially some short-term caution is warranted here, particularly when you take it within the context of the indexes potentially failing to break out from their current levels here. I've got an overlay of the NASDAQ 100 with Bitcoin if you want to pull that up as well. Obviously, the correlation here is still very strong. Bitcoin has held up surprisingly well as we've seen this cool off in tech. But it is something to keep in mind whether how Bitcoin is going to fare if the indexes fail to hold their breakouts here.
Okay, so these coils and all these cryptos that we're seeing pretty clear in Bitcoin and ETH, they're not resolving higher, at least not in this environment, is what you're saying.
But is this a failed breakout, or is it just like a false start or a speed bump, as Todd Stone likes to call it?
Nothing.
I mean, yeah, look, exactly. So even if we get a pullback to 30,000, which would be a pretty noticeable sell-off here.
You think we go all the way to 30?
Every day.
That's an aggressive sell-off. We talked about it the other day in the meeting. If it gets to 30, you back up the truck, right?
Mm-hmm.
But
Absolutely.
What is the likelihood that we get down there? I would say slim.
If you didn't position yourself when we were chopping between 25 and 30, I think the train probably left the station on you. That
bullshit. The trade was to buy the breakout above 31 all day.
No, it wasn't. That would be such a gift to get a revisit at that 30 level. I don't know. The momentum behind these things right now, that would surprise me. I think a lot would have to change to get there.
Let's say that this isn't the top. Let's say that these things aren't going to come crashing down, which I believe is the high probability outcome, right? I'm just preparing for all outcomes. And we should just say that this is just a regular garden variety correction. I know JC hates that term, using it purposely.
If I ever use the word garden variety, just fucking smack me in the face.
Good work, Louis.
Let's look at the relative leaders throughout this brief correction. So I pulled up a bubble chart. JC's always saying, we need more bubbles. We need more bubbles.
Thank you.
So
somebody's listening to me.
And so this is a very short-term leadership scan. So this is the change since the 2nd of January, which was when Bitcoin had its little correction. And you've got the 2023 return on the y-axis there. And so you can see that there are really a handful of standouts here. So if this isn't the top, which again is the high probability outcome, you want to be betting on the coins that are showing relative strength throughout this correction, because chances are those are going to be the coins that continue to show strength when Bitcoin ultimately resolves higher.
The injective protocol, Arbitrum,
I don't know.
Ethereum name service. Do you guys have your names .eth like I told you to get? Do you have a Strazza.eth? I think probably shouldn't be saying this on air. But
didn't we do that last cycle? Yeah. Why are you stop? I don't know. I would have to check.
You don't have it. You deserve for somebody else to have it.
Didn't we do it like 2 years ago?
We didn't do anything because it's not my name is not Steve Strazza.
It was like $10 or something. I did something like that.
Just saying. If anybody wants to send me money, jcparets.eth, the wallet is open. Send away. I will accept.
No one is ever going to send you money that way.
That's not true at all. That's very wrong.
No one has ever sent you money that way.
People have sent me money that way.
No.
I've sent myself money that way.
I don't believe you.
Okay. It's on the old blocking chain. You can go see for yourself. Right? Tell them. It's a public ledger, Strazza. Everyone can see.
Exactly.
Yeah. Oh, look at my monkey
public
JPEGs.
data.
Yeah, it's all in there.
I watched a documentary called Bitcon last night.
Everybody keeps talking about it. Was it good?
It was fine. Nothing you don't know about.
You don't seem particularly enthusiastic about it.
No, it was fine. This was the one these guys made like just a complete scam coin, and then Mayweather got behind it, and the DJ guy from Miami, which we heard a lot about when it was going down. It's that. So it's
Which
cool.
DJ guy? Paulie D?
Oh God, the big guy.
Khaled?
Yeah.
Wait, is this a documentary?
Another one.
Yeah, him. No, it's
another one.
Netflix doc. I think it just came out. Bitcon.
Oh, it's a documentary.
Good.
I
There's
don't
also
know.
a
You don't
movie
seem that
called
excited
Bitcoin.
about it. I'm probably not going to watch it now.
Whatever.
It's what happened. It's what went on during the last cycle. They talk about the ICOs and stuff. And I mean, these guys were like career criminals who got
So I
behind it.
Googled Bitcoin, and the first result was a movie that came out last year called Bitcoin.
Conned. In
Con.
past tense.
Oh, geez. All right.
The con already took place.
All right. All right.
Why are they bringing Bitcoin into this? You know, it's a scam ICO project. It has nothing to do with Bitcoin.
Great point. Yeah, it's not
Because
fair.
people are going to watch it because they're not going to recognize the
It's
name of
such
the
a
ICO.
normie title. I
You know
hate it.
what?
I already hate the sound of this documentary, Strazza. Why
Dude,
are
you
even
know that
bringing it
Jay
up?
Woods? So I had dinner with Jay Woods last night. He was there. Jay Woods has never watched The Wolf of Wall Street. So Jay Woods is a floor governor of the New York Stock Exchange.
Good
You
for
know,
him.
he takes traditional Wall Street very seriously. He's a great guy, all those things. He has never watched The Wolf of Wall Street like in protest because he's so disgusted by that whole part of, you know, Wall Street. And, you know, I'm like, it's a good movie. It's Leonardo DiCaprio, Jonah Hill. What's the pretty girl?
Margot
What's her
Robbie?
name? Smoking hot. Like, watch the movie. He's like, no.
It's funny.
Isn't that funny?
It's a funny movie.
It's a great movie.
I don't know if it's great. I don't
Louis-
watch Billions for similar reasons.
Louis, final thoughts, and then we got to bring Jeff on.
One more chart, Celestia. Let's pull it up. We need to pull it up. We have
I was
to.
looking at this.
Oh, yeah.
morning.
Relative strength, guys. This is the definition of relative strength. This is my chart of the day right here.
Every time you bring up a trade idea, it's a black chart? What's that all about?
Because we don't have this data in Optimus, so I have to go onto TradingView. Come
we
on,
have
don't-
a meeting. We
don't-
have a meeting later today about this data. Let's bring this up so that we don't have to have these ugly black charts. This is unacceptable.
You can
Hey,
get.
I don't mind the black charts. It seems like a you problem, JC.
Yeah, but I'm the only one that matters around here. So I don't know if you forgot.
Anyway,
This is a dictatorship.
I think we've let this black chart stuff go on for too long.
Too long. Agreed. This is unacceptable. You had me at the bubble charts. You lost me at the black chart. But nevertheless, great setup. TIA. Tell me more about this scam.
Oh my god. Relative strength. You know, you keep talking about it. Relative strength, relative strength, relative strength. Bitcoin is sold off. A lot of the new highs have dwindled in recent weeks. But Celestia just keeps on making new highs. It's just impossible to ignore.
What's the market cap here?
Couple billion.
So
yeah,
not
a couple
not
billion.
nothing.
So it's not a complete scam.
No, I was just kidding. I mean, I hope it is a scam. It'll probably do better. 2.5 billion market cap. It is the 36th largest cryptocurrency.
You know, Injective has something similar going on. Just nice and tight here, coiling. Not much downside through the selling pressure.
Yeah.
I love this chart. This is great.
Injective protocol currently sitting at 3.1 billion. 29th largest cryptocurrency.
All right, Louis Sykes, Crypto Friday. Louis, we'll see you in a couple weeks. In
Louis,
New
you're
York.
the man.
Good work, Louis.
We're going to
Adios.
get you some pizza.
A lot of
I'm looking
people.
forward to it.
More than once.
They don't have Italians in New Zealand, right?
Probably not. I'm bringing Jeff Hirsch on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Jeff Hirsch.
Happy New Year, fellas.
Happy New Year to you.
Happy New Year to you. Too much headspace.
Me?
Yeah, you're
too much
like-
headspace.
You're like,
Well, you know, we have certain things going on in the background that are not necessarily.
by design.
There might be a cat walking around.
Not safe for work. What's going on behind Jeff?
somewhere.
Jeff Hirsch, who is the worst golfer, you or Steve Strazza?
Me.
I don't know. I don't think so.
I think Strazz has got a few strokes on his handicap better than me.
Strazza's problem is that he's trading from the course.
My problem is I got a couple of decades on Strazza and some rugby injuries in the shoulder.
Yeah, but you work on your game. He does not. He just goes and plays.
He's
That's
a
not
natural. He's
That's
a
not
gift. Going and playing is working on the game. Hello.
No,
Jason,
you need to work on your game.
He knows nothing about my golf game. Zero.
I played with you a bunch of times this summer.
Wait, this is my New Year's resolution.
What?
To play golf with Strazza.
Yes, let's do it. Actually, Dr. Phil told me I need to play more golf in 2024.
He
I
told me
don't
that
believe
2
that
years
for
ago.
a second.
We got to walk the course.
Did it work?
Yeah, well,
But how do you walk the course while you're double fisting beers? How does that work?
because I don't double fist beers no more.
All right. So Jeff Hirsch, Santa, no show. Does that mean the 1987 all over again?
Oh yeah, just sell everything,
That's
go into your bunker. It's done.
M2, reverse repos, right? The whole thing, yield
The whole thing,
curves,
just cash.
Powell ruining everything, the Trump, the whole thing.
Guys, seriously, people are going to take this serious. Seriously, though, is the bull market canceled, Jeff? Like, what does this really mean? We've seen it before.
It means it's a warning sign. It's time for some caution.
Okay. First of all, can you explain to me, how do you know so much about seasonality and the Santa Claus rally? Like, who are you?
It's kind of like Strazza's golf game. I'm just good at it.
No, I think you're better at this stuff than Strazza's got golf.
I would give you that.
Why don't you tell the folks who might not know you, what do you know about this shit?
Well, there's this book that my father started back in the 60s called the Stock Trader's Almanac that he put out just after I was born. He created it while I was still cooking. He incorporated the company when I was still still in utero, the year of my birth.
In the valley.
So I was born, bred, weaned, raised on charts, cycles, patterns, seasonality. I used to, look at him over his shoulder, in my pajamas, saying goodnight to him and stuff. So I also found out when I started working for him in the early 90s that there was a certain click in our brains. Much more iconic thinker than everybody, myself included. But he was explaining something to some the writers and analysts around the table. And everyone was like, I don't get what you're saying, Yale. And I said, nah, I got you, Pop. So that's when I realized that this whole cycle, observation, pattern recognition capacity was within me as well. So I've been doing this myself for over 30 years. And basically, just like golf, it's practice and also a little bit of understanding and realizing that humans are behavioral creatures. And they do with their money. What they do with their money is they do on a regular basis, as well as getting up every day at the same time, having your lunch, going on vacation, settling things up before the weekends, monthly bill paying, quarterly operations of funds and institutions, et cetera, so forth. So, we know a little bit about this. 57th edition of the Almanac just, came out the end of last year.
Speaking of the Almanac editions, is there any particular reason why some years they're green, some years they're red? Should I be reading into this at all? What are you trying to tell us?
Well, it would be hard to discern which year was which on the shelf if you didn't have a different color. So we've had different, rotations, and there's a 4-year cycle.
They used to be more boxed. Now they got the spirals.
JC, come up to the office. I'll show you the ones going back to the 70s, and they've changed over the years. We've tried different things. The boxing, made it a little bit bulky. Some people like that better. I think the current edition is pretty sharp, actually.
I agree.
Like what we did.
I agree.
Like it.
Yeah, and the color rotation, it was kind of on a 4-year cycle pattern along with the 4-year cycle. Okay. So here we are in election year, January, a little softer than normal. January's been weaker in the last 21 years or so, 25 years or so. So this profit taking here, this Santa no-show is definitely a warning sign shot across the bow, but it's not a retreat, indication at all. I put out an alert, an issue to the subscribers and also on the blog and Twitter that 2 out of 3 ain't bad. Towards the end of last year, we were singing Santa Claus is back in town, and now we cue up a little meatloaf that 2 out of 3 ain't bad. So I know that might date me a little bit.
So what if the first? So when you talk about the 3, you're specifically referring to the Santa Claus rally period, which is the last 5 of the year, first 2 of the next, which just ended on Wednesday. Santa didn't show. S&P was down. Dow was up, by the way.
So,
just saying. So is China.
I mean, listen, not a horrible, sign that the Dow was up during that. Just a bristle, not much, but
Yeah. First 5. Now you got the first 5 days of the year, also down so far. That ends on Monday.
Yep. And then the full month January.
You got the whole month of
So,
January. So that's the trifecta.
My illustrious late father, who would have been 100 this year, passed away a couple years ago at the ripe age of 98, invented the Santa Claus rally and the January barometer. The first 5 days was an old indicator from 40s, whatever. It's been around for a long time. And when January started to become lose some of its luster as one of the best months of the year, it still is one of the best, but it's not as powerful as it was. Seemed to be a lot of profit taking happening in January. Just the way seasonal patterns shift a little bit. We created this January indicator trifecta, putting all three together. And last year we had a positive when all three are up, as last year was. The year's up over 90% of the time. It's 17.7% gain now, with averaging in 23. And when any of them are down, the results, begin to weaken. But it's not the end of it. As I was saying before, 2 out of 3 are pretty solid. You guys could track some of that on the Twitter feed at Almanac Trader or the blog or whatever. But the key now becomes the full month barometer. Even if we have a weaker first 5 days or a down first 5 days, we can eke out a gain, for the full month. That'll be encouraging. But if not, it doesn't mean it's 30% down bear market. It means it's probably going to be tougher slogging this year, and gains will be, harder to come by across the broad indices. Doesn't mean we can't trade different sectors and different stocks and different things that we rotate in and out of. It's a real caution sign. We'll probably get an opportunity to buy stocks at a better price. And especially with what's going on the planet geopolitically, what's going on with the election, the campaign trail, there could easily be some news and things that shake out. We've also got the 10-year ticking up, dollar strength a little bit. So there's some factors that could give us a better buying opportunity. So I'm not jumping in right now. Now, you guys are talking about Bitcoin and that stuff. And, you had to get in when I told you to get in back in late September, October with the seasonality study that I did with Adrian Zdunchik, another CMT guy. Great brain, great guy. He's the crypto
we need to have him on the show. I don't know why we
should.
haven't got him on the show.
He's such a mensch too. He's such a real nice guy and super smart.
Jeff, I was going to ask about this. Last time you were on, we went through the report. This was probably 3-4 months ago now.
Yeah.
How did it turn out? What happened?
Great. Well, I'm an ETF guy. I'm not getting into some coin exchange. That's not my bag. Mm-hmm. So I spoke to Adrian about it because he was more versed in it than I am, and he showed me the correlation with the GBTC and Bitcoin, and nicely, it was also selling at a discount back there in late September, early October. My trade is still up 80% as of right now from when I bought the GBTC. That's like my speculative stock trade. I will, as per my own, remember the old ground floor stocks, JC, as per our ground floor,
ground floor stocks. I'm not recalling.
Yeah, we used to have a newsletter called Ground Floor, and we should probably. So it was a great name. Another one of Yale's great inventions, but the whole thing was selling half on a double. I know you.
Oh yeah, we do that. Got it. Yeah.
You take your initial investment off the table, let the rest ride. When this GBTC doubles, I'll take I'll sell half of that position. Just small position in the trading account, but it's worked out well, Steve. I mean, it's set up so well, and there was a powerful fourth quarter move with everything else.
And what are we looking at in terms of what are the seasonal trends now in the beginning of the year? Here.
Well, I just want to tell you about some of the year-end seasonal trends. There's another strategy we have in the Almanac back on page 116. If you got your handbook handy on your desks, if not, we'll have to talk about that offline.
I usually do. I was just looking for it. I don't know where.
The only free lunch on Wall Street. It's basically 116. It's basically bargain stocks. Pick a new stocks. Stocks make a new 52-week lows towards the end of the year. It used to be mid-December, and we've done it triple witching day. There he is. It's probably a little signature on the inside of that one, JC. But
there it is.
There it is.
That's going to be worth like $3 one day on eBay.
Yeah, if I just put the date on it and signed it without my silly little comments, it would be worth more. So that trade works
For the
better.
record, hold on. We need to say, what does this say? It says October 12th, 2023. Buy in October and get your portfolio sober.
Us.
We listened, Jeff. Shout
Yeah,
out. You know, you get your
stock.
flowers. You get them. You get them.
I bought stocks that day. That was my dad's birthday too. I put out a little post on him that day, and I bought stocks near the close. Not the ultimate low, but
Well done.
hat tip to Pops. So the free lunch strategy, we picked a nice basket, about 13 stocks. And if you look also nearby that on the free lunch page at the bottom, it says, sell any quick, generous gains quickly.
Yep.
So I got into almost all of them. They jump around a bit. We had some trading parameters. You can go check it out at stocktradersalmanac.com. But one of these stocks, I think it was SCWO, something like 324 water or something like that.
Yeah.
I happened to be looking at it during the day in my account, and it was up 25% for the day.
Yeah.
Up 90% of the trade. I call my partner, Chris, and I'm like, dude, should I sell this? He's like, what, are you kidding me? I'm like, all right, hold on. So it just sold it. I mean, it's like, yeah, how do you leave 90% of the table? And it proceeds to fall down. I bought it at like $1.04. It was up to $2. I think I sold it around $1.98, $1.99. And it falls down to 160, and now it's around 140 or something. So just a little trading lesson. Sometimes you don't nail them right, but that was just, I happened to look at lunch and go ahead.
This is literally a penny stock, though.
Yeah.
I think you do it on the whole Russell 3000.
No, we do it on. We use NASDAQ.
Okay.
And next at NYSE, and they have to be over $1. They have to have some liquidity.
Okay.
And it can't be some, wacky Chinese ADR or something that doesn't make any sense.
But how about something
like no new issues, no splits, no special dividends? They got to be regular class, regular common shares trading for over a year.
But you don't stay away from the large caps, right? Because
No.
where I'm going is they might not experience like quite as crazy moves, like something like this.
Right. But we also screen for stocks down the most, like down massive amounts. And if you go look at here, I mean, I have the page up.
Was Pfizer on the list, Jeff?
No. Let's see. Free lunch list. What did we say? We changed the parameters depending upon relative to the market that year.
Got it.
So let's see, 50,000 shares on average past 50 days, over $1, market cap of 50 million. Any stock knocked down 30% or more from its 52-week high. No preferreds, no funds, no splits, no special dividends, no new issues, et cetera, so forth. And then we put a 3%, channel on it. Can't be up or down more than 3% from the closing price, and then a 15% trailing stop.
Wow.
So it's a nice little trade.
Yeah.
But, it doesn't always work.
Strazza hasn't wrapped his head around it. He says,
I'm
I like
fine
this
with
more.
it. I'm fine with it. It's the opposite of what we usually do, right? Where you're literally scanning for weakness and buying the worst ones. I get it. You talk about how it's short.
It's because of the tendency for stocks making new 52-week lows mid to late December to outperform the composites and the indexes because of tax loss selling and the bounce back from there. It's just a little seasonal trade. You asked me about seasonal trades at the beginning of the year. This is part of it. It also plays into the small cap effect, which used to be more January, which is concentrated more so in the last 2 weeks of the year than it used to be. It used to be called the January effect, not to be confused with the January barometer. And we saw the Russell bounce back
Big
pretty
time,
strongly.
right on time.
I mean, I have my seasonal chart of that I had in my live my webinar for the members the other day. I don't know if you want me to put that up or not.
Listen, in November is when small caps historically start to outperform into the second quarter of the following year, and we saw that this year. I mean, that's really what it is.
It may have peaked a little bit early. We're tracking that. We'll be a little patient. But as it says back there in your almanac, around late October, it says late October is the time to buy stocks, especially techs and small caps. It's in there on the calendar page as a reminder. So
let's get into the 4-year stuff.
Yeah.
We're now into an election year. Historically, the election year is very strong. The back 2 years of the 4-year cycle tend to be the stronger 2 years. However, in the first quarter of that election year, stocks tend to struggle somewhat. The strength comes in the last 3 quarters. Is that right? Do I have that right?
You do. A little different when you got a sitting president running, but we've got
more
some
bullish with a sitting president running, right?
Yeah, S&P is up 12.8%. Your sitting president's running down.
Is it 10 up in a row?
I believe so.
Since like 1940 or something.
Something like that. This is back to 1949. I'm not going to go past World War II because
pretty good.
It's a great record. That's worth.
And why don't you go past World War II?
Because it's a new world, Golda. I mean, the military.
I'm asking. I'm just asking.
I know. I'm just telling.
So it was a new world after World War
II. It's like when guys like certain unnamed newsletter reviewers go back to 1896 to talk about the history of something on the Dow. Like, it really matters. I mean, on some levels it does, but seasonal patterns change dramatically when we shifted from an agrarian.
Let me tell you something. Go back and read Charles Dow's letters in the late 1800s and take the date off. And if you told me that they were last week, it would make sense. Just for his
insights are wonderful, but the patterns and the histories going back that far aren't as relevant as more recent.
But also, you had a different economy because at that period after World War II, it was no longer an agricultural-based economy. That's a big factor.
That's exactly what I was just saying.
It wasn't just the war, though.
It wasn't just the war. It was the shift to the industrial complex and the service economy, and it wasn't fueled by. I mean, there's a chart that I show. You've seen it with. You compare the first half of the last century, where it's like buy in May and go away because it's all the money coming into the market. They're buying it a fuel, feed, seed, whatever. Hiring people, and then harvest time, and then the loans come due around late September, market sells off. That doesn't happen anymore. Right. And yes, Nick's right. New world order after World War II. And, just a new economy, a different economy, as we were just saying, JC. So
living in the 50s must have been, like being old enough to party in the 50s, just to be clear.
I always wanted to be old enough to party in the 60s, but, I'm a little half flower child somewhere in there. I don't know.
All right.
So when there's no sitting president running, S&P down 1.5%. But even the years when you just have any of the combinations of an election year, you're looking at 7-8%. Our outlook coming into the year. It's official. It's on the website. Was about 8 to 15% base case scenario for the major indices, and we're still sitting. We're still comfortable with that, but we reserve the right to change and adjust as new data comes in. The 4-year cycle has been firing on all pistons the last 3 years. You've tracked it. You guys. I know you have. The seasonals have been on point. At some point, it's not going to be that easy. It's just the cycles aren't going to give it. Just like technical analysis isn't always perfect, but isn't always as effective as sometimes as it is other times. So you're going to have to make some adjustments, and there's macro events. We've got everyone's looking for the soft landing and the Fed cutting, or is it going to be 3 times? And people are making calculations on inflation. We're going to have to see what happens there. I'm not an economist. I'm not I can make a prediction based upon the patterns and stuff, but I don't know what's going to happen within the next couple of months with, some sort of event that might trigger inflation or the economy. Right now, things are looking pretty solid, and that's what we're sticking with.
Let's stick with the election year. Yeah. There's going to be a lot of questions, a lot of talk this year about what president's good for what president's bad for the market, etc. I want stocks to go up. Who should I vote for? You want to do some myth busting here?
First of all, I think it has a lot less than what the Almanac has taught me over the years. A lot less to do with who's in office than there being a change in office. So you can't really tell what's going to happen. People try to handicap that, and I think it's a great game for TV. But the reality of it is that uncertainty versus certainty. Yep. So if you've got the same person in office, the same administration with the similar policies, civic, economic, and diplomatic, you're going to have a market that's going to be much calmer and much more going up. So yeah, you could say vote for Biden or whatever, but you're voting for, I mean, vote with what you think is best for the country, but the market's going to vote with certainty. But what happens is that there's a little effect that I call the ding dong, the witch is dead effect. When you got a market that's, and a country that's not happy with the existing president, and it goes down into the election, when that person gets ousted, there's generally a nice pop towards the end of the year after the election when things have been changed. So, and regardless, there's only been 2 losses in the last 7 months of election years since 1950, which is 2000 with the undecided election and 08 with the GFC.
In the last how many months?
7 months.
Wow.
There's a page on that in the Almanac.
So Jeff, what about the decennial cycle? People who really hate seasonality poke the most at that one. What does it matter what year it ends?
Me too. It's not the one that we're most confident with. I plug it into the aggregate cycle like I know you do with the composite. But I mean, the middle of decades and the end of decades are the most significant. Again, I refer you to page 131 in your prayer book, and you can see.
I feel like I'm at church, like page 32 in the Missalette.
Should I go into Hebrew? No, that's not. Baruch, I thought it. Sorry. 5th year is very strong. 10th year is weak. 4th year is, pretty good. I don't think it has as much influence. I think the thing with the 4-year cycle is that you've got this regular occurrence, unlike any other country on the planet, where we elect the leader on the same day every 4 years. So, there's a behavioral finance pattern there that just exists. I mean, arguably one of the more important leaders in the world, warts and all, whoever it may be. But that's the kind of thing, I look for, people talk about these secular cycles, the 17 and a half year, the 18 year, this or that. And then, I'm going to throw this out there, the super boom, the 500% moves that the forecast I made back in 2010 for Dow.
Have we gotten there yet?
Damn close.
Well done, Jeff.
And I said by 2025. So we've got 2 years to get there.
It's a great book. I'm going to give you a shout out for those of you who, like the Stock Traders Almanac and like the Seasonality. Jeff wrote a book called The Little Book of Market Cycles. Do I have that right? Little Book of Market Cycles?
I believe you do, sir. I think it's Stock Market Cycles.
You know how Wiley made like a series of little books? There's like a Little Book of Market Wizards, also great, by the way.
All really good.
It's a great format.
Really
is. It's short. So, and Jeff, I feel like as little of a book as it is, by definition, it's the little book. I feel like there's a lot of good stuff in there. You really hit on a lot of cycles.
Thank you. I'm a big fan of the Shakespeare quote, "Brevity is the soul of wit." So, putting that book together was helpful to sort of consolidate and put these cycles in a concise format. But the secular cycle, what Yale discovered back in '76 was that the market makes these 500% moves following war and inflation. When we came around and discovered it again in 07, 08, we were starting to track it in 02. We realized there was a technology, part of the equation, something I call the culturally enabling paradigm shifting technology.
Oh, wow.
It's a good one, right?
It's a lot.
You could hyphenate all those if you wanted to. I'll say it again. Culturally enabling paradigm shifting technology.
And what does that mean?
Indoor plumbing, air travel, the combustion engine, the automobile, refrigeration, the microprocessor, the internet, AI, biotechnology, any of these types of things that touch everybody individually and the planet collectively. It just sort of changed the world. Sometimes oftentimes with a cocktail, a package of them. I think we may be experiencing some of that with technology. It changes productivity, and that's what, triggers these big booms. And that's what we've been doing for the last, 10, 15 years. It depends on where you want to draw the line, but it has the potential to go on. I do have some concerns about, a more 70s and 80s style market once we get over the top, end of next year, end of this year into next. But that pattern is not a regular pattern. It's not, a cycle, a 4-year cycle. It's not 18 years. It's not 70. It is based upon events. And on the big chart that I draw, you've seen that there's, these war events. We had, Archduke Ferdinand assassinated. We had, Pearl Harbor. We had, these events when the U.S. entered World War II. We had Gulf of Tonkin resolution, these types of major events, and those cycles, like the bull market in the 20s was about 8 years. It's about 18 years, from 82 to 2000. The Great Depression and the World War II bear market was like 25 years. So it's not always a cycle based upon a particular time cycle. Sometimes it's an event driven thing. And
what about like a Condriatic wave? Like, do you go, have you done some work there? Like these 50, 60 years, what is it? 64 years? What is it exactly?
Yeah, it falls into that category for me of being a little too dogmatic with that length of time.
And how helpful is a 64-year cycle, right?
It's a little bit, when you get past the, average lifespan or at least work span of somebody, it becomes a little less helpful. Again, same thing with the Elliott wave. I know there's some validity there, the way things move up and down, and I'm familiar with them. I check them out, but it's not, not something that I subscribe to. We all use our own, our own tools.
Jeff, what about days of the week? Mondays coming in hot on Mondays, huh?
Days of the week. Watch it. The book Yale put out in the 80s was "Don't Sell Stocks on Mondays." You got to watch that. That tends to be a little more influenced by the overall market. When there's a bull market going on, Mondays are going to be hotter. When there's a bear market, people are going to be coming in scared and not happy. On there it is. You see that where your finger is on top? That was the bear market years where Mondays were down.
Got it.
That's why I bought stocks on Monday, October 23rd, because we were in that bear cycle, that little.
But it seems that in bear markets you should buy on Mondays because then they do well for the
Yes,
rest of the week.
it says the line is "Don't sell stocks on Mondays."
Don't sell stocks on Mondays. Got it.
And yeah. So
what
that's
about the time? What about the time of the day?
I just had a question about this on the members webinar. Rally the close, buy around 2:30 when things are functioning normally. I always find like you're coming into a day, you want to pick up a position, a security, and it's like, damn, it's above my buy limit. Just wait till after lunch, East Coast time, and you might just get your buy limit when everyone goes out to get a coffee or a Diet Coke or something.
Yeah, man, they're selling it. They're selling it at lunch.
Isn't that your middle name?
Selling at lunch?
Lunch.
Selling or lunch?
Lunch.
Listen, I'm on the Perlman program, all right? I'm only doing 14 course omakase when I'm in the city, once or twice a month.
Dude, I did a 20-hour fast yesterday.
Attaboy. 20's easy.
Yeah, totally easy.
20's easy.
All right, Jeff Hirsch, editor of the Stock Traders Almanac. Always a pleasure, sir.
Well done, sir. Well done.
Before Jeff goes, everybody's asking this. So the Santa Claus rally is in the books.
Thank you, Steve.
Red light. First 5 days. If the first
yellow
5
light,
days come in,
yellow light.
Do they neutralize each other? Do they net each other out? Do you glean different insights? There's some overlap there.
2 out of 3 ain't bad. 2 out of 3 ain't bad.
It's more nuanced than that, Steve. It's not.
Yeah.
It's not a red light, green light thing. It's look at your
Fair
other
enough.
indicators. It's a warning.
Good answer.
It's do some work.
Thanks, Jeff.
Yeah. It's a warning
Awesome.
to do more work, which you
Or go
probably
to
should be doing
StockTraders-
anyway.
Go to stocktradersalmanac.com and listen to what I say.
There you go.
Thanks,
Attaboy.
Jeff.
Nice plug.
go.
I like it. Jeff Hirsch.
All right, I gotta make some trades. You guys gonna be okay alone? for a
I'm
minute?
going to I don't know. I think we can start putting up some bets on who's gonna win when we all play golf together.
Oh, dude, I got this. This is my year for golf.
He
I'm not
takes it
worried.
very seriously.
Who, Jeff does?
Yeah.
I like that. Good. I like to be around that.
Why? Because I don't take it seriously.
You do not take it seriously. You're like, where's the clubhouse? We've gone too far. It's time to go back. What do we play?
It was
11
hot
holes?
and muggy that one day, so it's like, let's go to the bar.
The bugs, I know.
And then I don't play golf that much, so like if I got a 200-yard shot that I could potentially lay up on, why am I going to lay up? Let's fucking go.
I got a buddy
What's
like
the
that
difference?
here. We hit the clubhouse at the turn, and it's hard to get him out. It's hard to get him back in the cart and to the 10th tee box. Real tough. So I get it. A lot
Extra onions on the dogs.
Extra.
All right. We'll have Alfonso come on in a couple of minutes, but in the meantime, just very mixed out there. Bitcoin falling out of bed a little bit. Crypto stocks all leading the way down so far today. Yeah, very mixed. A lot of red, a lot of green. Bit of both.
Let's do a quick little rundown. You got Dow futures exactly flat right now after being down 200 points earlier this morning. S&P futures up 10 handles, up 20 basis points. NASDAQ futures leading the way higher, up 40 points, 25 basis points. Bonds are still down. 30-year futures down 70 bips. Gold up a little, silver up a little, copper flat, oil up almost 2%. And the dollar showing some weakness here as stocks starting to catch a bid at the highs of the day. Spencer Israel, by the way, or equities.
Dollar did spike off that jobs number at an hour ago now. So yeah, well off the highs of that.
Dollar futures filled that gap from when, Strazza? December the 14th. And Strazza, what happened on December the 14th? Oh, Strazza's not here. The new 52-week highs list peaked on December the 14th.
Yep.
It was also the day following that big FOMC announcement
That's
where
what I was going to say.
Finally admitted to the pivot.
Who gives a shit?
Yeah.
So hold on. So the day after the new highs list peaks, that's when the Powell did his thing that you guys are all excited about?
Yeah.
Got it. And so it's a sell the news situation? Is that what happened?
No, it's not. It's not a buy or sell signal. It's an indication that those events can be turning points and that they matter, right?
So stocks stopped going up after the Powell said his thing.
So
is it sell the news?
Yeah. I mean, in this case, yeah. I mean,
why don't you show what stock? Why don't you show slide 2, which is what sectors have done since the new highs list peaked on December the 14th. You can zoom in there so you can see what's going on. You got healthcare leading the way, up 4.25%. Staples up 2%. Utes up 1.5%. Energy up 1.5%. Communications up. Financials up over 1%.
Right.
Essentially, most of the other stuff's kind of flat to down. Q's down 2%.
If we had done this a week ago, this looks a whole lot different, right? So,
would it have?
This chart would look a whole lot different if you cut it off at a week ago.
You think so? Why?
Just look at the chart. I mean, everything is going down in the last week, right? So,
here, I'll tell you right now. We have the technology to be able to do such things.
So
yeah, it looks pretty much, yeah, it's not that different.
But I was there. We were there. I mean, the market, everything was going up.
I mean, I'm literally staring at the data. It's not that different.
All right. I mean, the last 2 weeks of December, maybe had at least head into the last, as far as the indexes, as we know, we're all approaching new highs. Everything was going up. Maybe the new highs list wasn't going up.
And there was already sector rotation taking place underneath the surface.
Yeah.
Healthcare taking the leadership. Yeah.
But again, the original point of this was that these events, Fed meetings, they can coincide with turning points. And that's, I don't think, a coincidence. So
they stopped buying stocks so aggressively based on what the Powell said. All right.
Which is sort of, ironic, because you would think, based on what he said, that everybody would want to buy stocks. But
it's almost like it was priced in.
They kind of the market tends to front run. And
it's almost like the market is a discounting mechanism of future events.
What he says. So, yeah.
As usual, asset prices win again.
Hey, anyway, speaking of the U.S. dollar, Morgan Stanley joining the crowd. They are throwing in the towel on their bullish dollar bet. So add another one to dollar bears. There's only a few of these firms left that have bullish outlooks on the dollar. Just another.
I didn't even know these firms. I didn't know these firms like had opinions on the dollar.
Oh yeah, sure. Let's see. Goldman turned bearish in December. Morgan turning bearish yesterday. Looks like a majority of the street is bearish the dollar. So there you go. Consensus.
Yeah, I don't think so.
Not consensus?
I'm not seeing that as a consensus. I'd love to see the data. I'm not seeing that at all. You're certainly not seeing in the commitment of traders report either.
I'm mostly just talking about just sell side.
Yeah, can you send me that? I'd love to take a look at that, please.
I just closed it out, but yeah,
that's all right. No rush. Yeah. I'm not going anywhere.
Okay. I don't have much in the way of
no news, nothing exciting.
Not really. We did have dirty word of earnings. We had Constellation Brands report this morning. We actually do have an earnings calendar for next week because next Friday is when all the banks report. So we had STZ this morning. They did lower their full year earnings per share guidance for this year. Their numbers for last quarter were mixed. EPS beat, sales missed. Haven't looked at the stock yet. It was very quiet pre-market. Oh yeah, super volatile. Hey, look at that, up about 3% now. All right, well that's interesting. On a guidance cut. Oh, you know what it is? That's weird, man. Too much accounting for me. They cut their full year EPS guidance and they raised their operating cash flow guidance. Too much noise to make sense of there. So, in any case, we had STZ. And I think we have a chart. Thought we had a chart. Yeah, that was kind of it. I'm just looking at the movers here. Not a whole lot to say about it. Nothing really jumping out to me. Peloton was like up 10% at one point this morning, but that's like 50 cents. So whatever. No, that's kind of it's kind of all I
Nothing.
had. No. On the
Are you excited for earnings season?
Yeah, and then I had a realization the other day because we'll of course be in New York the 22nd through the 24th. So we're not going to really do a show on the 23rd, and we're not going to do a show on the 23rd and the 24th, which is like the busiest earnings week of the quarter. And I feel like that was intentional by you. But yeah, so that's a bit of a bummer because next week we get some earnings, just a couple next week. The week after is big. The week after, the third week of the month is the biggest. And we're going to be missing a couple shows then. So that was unfortunate discovery for me. But yes, I am excited for earnings season.
You're hilarious.
Especially because it seems like a lot of these companies are they're just so bare. The CFOs come out and they say all these bearish things about the economy and how uncertain the business landscape is, and I like hearing that stuff. I mean, I like hearing it because it's information, right? So
you listen to conference calls?
I haven't listened to one in quite a while, but I do like to skim transcripts. And I'll do like just a keyword search for certain terms that interest me. When I sense that there's a trend, a lot of companies, using certain excuses for their business performance, I'll go and do a keyword search for the word shrinkage, for example, right? To see who's blaming that, or for retailers, or I'll search for things like uncertainty or economic outlook, things like that. Keywords that jump out to me, just to see what they're saying. I haven't listened to a call. It's been a few quarters since I've
What's
actually
that app that Strazza likes? Quarter?
Yeah, Quarter does a great job.
That's cool.
Plus I love the after hours volatility. It's so interesting. It is so interesting. It may not mean anything, but it's interesting.
Well, it means different things to different people, right?
Right. Exactly.
Different strokes for different folks,
That's
as
right.
they
It
say.
means a lot if you're a day trader. It means not a lot if you're not. But I find it fascinating.
Yeah, your boy Dennis Dick. He's trading those after hours stuff pretty well.
I know it. Oh yeah.
Tell him to come on the show. What are we waiting for?
Dude, the timing is tough. The guy is trading like now. Like this is what he does.
Okay, fine, but tell him to come. We'll tell him to come in earlier.
Yeah.
We'll mix it around. We'll have an early guest. He's a good conference. He owes me. You know how many times I went on their show over a decade? Come on. The least he can do is come in once.
I was there.
Yeah, you were there.
I was there. Anyway. All right. You want to Fonz? You want to come on?
Come on, bring on Fonz.
Where's he at? Well, let's give him a second to get camera ready.
Does he have a bumper? I don't think I've ever seen the Fonz bumper.
Not good.
Yeah, you've seen it.
It's not good?
What's
Dude, we gotta have footage of him playing ping pong. Remember how good he is at ping pong?
What?
Chuck Harlow was like, "Oh, I'm so good at ping pong," and then Fonz comes in and whoops his ass.
All right, I'm rolling the Fonz bumper.
Fonz.
Hey guys.
I do like the jingle.
How's everything going?
Oh, you know, Fonz. You know how it goes. Just another bull market. A lot of food yesterday. I'm just going to reiterate that in bear markets, we didn't used to eat that way. And we talk about this all the time, Strazza. Bull market parties. In bull markets, parties are better and more frequent than in bear markets. Like, it's just, you have to observe the behavior of people, and what went down last night, that don't happen in bear markets, man.
I say this all the time. It's why I am a bull, a natural bull. Okay, it just jives more with me and my personality, my general disposition in life.
I remember the conference we went in Palm Beach too.
That was a bull market conference.
That was very fun, and people were very excited at that moment.
Yeah, we don't eat at breakers on back-to-back nights in bear markets, right?
That's right.
Alfonso. So Alfonso focuses particular attention on individual equities,
right?
Both US and ADRs.
That's right.
So Fonz, instead of me telling you things, why don't you tell me some things? What's standing out? What's different over the last few weeks, perhaps, or even the last couple of months that was different before? Talk to me about rotation. Talk to me about new names popping up on these Hall of Famer scans. Like, what's different?
Let's talk about that outperformance from international equities last year, especially Latin America. We're working on a really nice report focusing on Latin American equities. So I want to start this conversation with this chart. This is the 2023 performance. ILF was the best performing region with 33%.
Latin America up 33%, outperformed.
I was going to ask what that is. Thank you.
That's right. So first, let's take a look at this Latin American ETF. It's carving out a nice rounding bottom formation. I'm not a big fan of trend lines, but this one seems to respect it very well. So I think if we break up through this trend line, I think a major trend reversal is coming on the way for this region. Let's take a look at some of these countries. I know JC made a good point early this week, mentioned Bovespa and the local indexes like Peru.
Hold on, Fonz. I want to reiterate something. Best performing group, geographical group, I guess we could call it. Is that what we're calling it? Region of the world.
Yes.
I just want to reiterate what's in this group. So if you look at the weightings in Latin America, the weightings of technology is 0.0.
Yeah.
So when you talk about how it was people talk about how it was an AI-led year and AI saved it and it was all technology. Latin America led the way. It has 0.00% technology exposure, 22% materials, 30% financials, 13% energy. So just want to reiterate what's going on here. It's very, very different than what's going on in the United States. The narrative is that it was AI and tech that led. That's bullshit.
Did you already show the performance chart of the international indexes? Sorry if I missed it.
Yes.
Yeah, right here.
Yeah.
So let's take a look at this individual ETFs. Brazil carving out like a nice reversal pattern above 34.5. I think a new uptrend is it's coming. Then Mexico. This is probably my favorite chart in Latin America. This is a massive base. I like it above 65. Argentina. Filtering with new all-time highs at the 161%. I think some consolidation around these levels is more than welcome.
22% Mercado Libre in this ETF, by the way.
That's right.
23%.
That's right. The next one is Peru. Similar look at ILF, massive consolidation. So I think if we break these trend lines, I think a new uptrend is
ready for this? Are you guys ready for this? Peru, 51% basic materials.
That's right.
Wow.
Yeah. A lot of it's a lot of BVN.
And the last one is Colombia.
It's only 6% BVN. It's 22% Southern Copper.
This is the best one.
Colombia. I really like this short-term rounded bottom reversal above 23. I really like it, and I finally changed this table. As you can see, there is no technology in this scan. This is our leadership scan, and I don't know if you guys want to look at some individual stocks.
Yes. Hold on. Is there no technology because there just is no technology? It's not because you took them out.
No, it's because there's no technology. You see.
I mean, is Mercado Libre not a tech stock?
I was going to say it's not classified, but it probably trades.
It's consumer discretionary.
It is like the Amazon of Latin America,
Right.
But it's not tech. It's not tech, yeah. So the first one, I like this one, KOF, Coca-Cola FEMSA. This is a Mexican stock. Look at that rounding bottom formation. I like this one about like 91.
Hold on, Spencer. A bunch of these Coca-Colas, but not the actual Coca-Colas, just got added to the S&P, didn't they?
No, just one of them.
Was it CCE? It wasn't this one. All right. No, it wouldn't be this one. Sorry. This one. Keep going, Fonz. There's like 8 Coca-Cola stocks.
Yeah. Like from Europe, from Latin America or Mexico, and main Coca-Cola,
All right, sorry.
So the next one is Petróleo Brasileiro. PBR is like the 6th or 7th attempt to break this 15.5 level. So this is an energy and oil and gas integrated stock. Let's see if it finally can break through this overhead supply. Next one, this is an Argentinian regulated electric stock. It has been carving out a reversal pattern. It's right above the 38.2%, above 8.5. So as long as it's above this level, I think the uptrend is pretty intact. And finally, one of my favorite charts from the list, Bancolombia. It's a regional bank from Colombia, of course. Very similar outlook to the ETF. Above 31, I think that's how you play this name.
Banco Colombia, CIB. Look at that base, man. And this goes back to what we were talking about before. You might not care about Colombia. You might not care about Latin America. But when you're looking at the individual stocks and sectors and countries in these areas, we're seeing bank stocks breaking out here too, right? Yeah. Like it makes sense. So maybe if you hadn't noticed that bank stocks are ripping in the United States and you're noticing that they're ripping in Latin America, maybe it's like, hey, maybe I should look at the American ones. Holy shit. Citigroup is making new highs, right? Like we live on Earth. We don't live in America. We live on Earth.
If you don't trade these names, they are very useful for information,
Yes.
And to measure risk appetite outside of the US, because most of the investors in the US just focus on US stocks, and they forget European stocks, or in this case, Latin America. And Latin America has like a lot of exposure to natural resources, basic materials. And I think they are like great vehicles to gain this exposure and to diversify your portfolios. So if you look to these names, looking for relative strength, I think you will find good opportunities.
All right.
Claus, can you send me that chart with the regions?
Yeah, I will send it to you.
Report should be up today. Fonz did some great work on this. A lot of good names in here. You're right, Wavy. We took them all from you. Awesome stuff, Fonz.
Good job, Fonz.
Thanks.
Fonz, do you want to hang out for some recess?
Yeah, that's it.
All right.
Do we have these AMR charts, Fonz?
Yeah, definitely.
All right. First, I just want to say I'm just loading up on these banks. Bought more Key Corp today. I'm finally in the wells. These regional banks look so ready to go. Drop that VWAP from where they started coiling. It looks like some of them are already going right now, the strongest ones. So I love this trade, right? Trading these little short-term continuation patterns off the bases. Very bullish on these stocks right now. JC and I were talking about earlier this week how financials have corrected in a far more resilient fashion than other areas of the market. That really stands out to me. So that's on my radar here today. Next, I think we need to just talk about this Alpha Metallurgical Resources really quick, because this is truly remarkable. You don't see this. This doesn't happen. Okay, so
what is it that doesn't happen?
This stock is up 18,000% about. If you want to throw up the table too.
Yeah, that's it.
So I knew it. I was saying to the guys yesterday, I said, no stock has done better than this stock off the 2020 lows. Did I say it, Fonz?
That's right. That's right.
And then I said, okay, let's run the numbers. So we ran the numbers. This is every stock in the Russell 3000. So it's the entire stock market off of their respective 2020 lows. What stock is up the most off of whatever its low was in 2020? AMR, almost 19,000%. Now, other coal stocks are on this list. You see Peabody, you see Consol down in the middle here, 3,000% gains off the 2020 lows. So coal has been good, but that's not the whole story, right? How has AMR added basically $5 billion in market cap in 4 years? Stock buybacks.
Ooh, tricky.
This company has gone from 38 million in market cap at the lows from 2020 to about 5 billion today. How did they do it? Repurchased about 30% of their float.
Wow.
Retired almost a third of their shares.
That's great.
Some would call it market manipulation.
It's not.
Usually politicians. It's really just an effective and an efficient, particularly tax efficient way to return capital to your shareholders. Kudos to the leadership at AMR. This is truly incredible. Just awesome. Driving shareholder value, driving shareholder return for anybody who's owned this stock for years now. And it's worked tremendously. So I just wanted to give this company and their leadership a huge shout out.
By the way, can we talk about how Strazza's recess is talking about the stock market?
This stock has a float of 11 million shares. Whew, that is.
Can you throw up slide 2 quick?
Throw up the share. Throw up the share bars.
This is good. This is good. Slide 2.
Right.
How do you feel about that?
Yep.
So up on top, you have AMR. That's the stock that Strazza's talking about. Down below, you have the XLE, which are the integrated energy names. And boy, do these two charts look exactly the same. Am I wrong? Are we going to split hairs?
There's a lot of oil and gas on this list of top performers off the 2020 lows. There's a lot of coal, right? I think there's probably some uranium.
What's the Nazi from Massachusetts who has a problem with share buybacks?
Oh, no, yeah. Lots of people have issues with it.
What's her name?
Lots of people don't have issues with it.
Elizabeth Warren.
But there's a reason. There's a lot of oil and gas on that table too, right? I mean, negative $40.
And here's the way from a business perspective to think about share repurchases. If you're in an LP structure, a partnership structure, right, and one partner doesn't want to be involved in the business anymore, What do the other partners do, JC? They buy him out. They buy his stake, right? That's all that this is when you're buying back shares on the open market, right? That's how you have to think of it. The company's just going out and it's buying out some of its partners, some of its shareholders. It's no different how nobody calls it market manipulation when a company raises capital or issues shares. Not market manipulation then.
Only manipulation when you're on the wrong side of the trade.
So it's a great way to generate shareholder return is the bottom line.
All right, listen, we got to go, but I want to throw up slide 3 because it's hilarious. Great. I haven't listened to it. I'll try to get to it this weekend. But,
I love this picture.
It's so good. It's so good. So again, Joe Fahmy and I were on Compound and Friends with Josh and Batnick yesterday. Podcast is out. Go listen to it. A lot of fun. Go to the next one. Those of you who don't know Joe Fahmy, we invite him on the show all the time, but he's so busy. He couldn't even have sushi with me. So, his loss. Go check it out on all your favorite podcast, channels or whatever they're called.
All right, my reset for the day is a quick tip. If you have a rug where the corner is like sticking up, I tried this last night and it worked 100%. Take a glass full of ice cubes, okay? Pour the ice cubes around the corner and then stick the glass on the very tip of the corner and leave it there till the ice melts.
By glass, you mean like a cup of like a glass?
Yep, just like a drinking glass. Yep.
Oh, really?
Yep. Oh, yeah. I had this corner of my rug was sticking up real bad. Just dumped the ice on it, stuck the glass in the very end of the corner. Ice melted, corner fixed.
I saw that video on one of those meme accounts on Twitter. I know what he's talking about.
Oh, yeah.
Good for you, Spencer.
Worked like a charm. Anyway, that's what I got.
Alfonso, what country makes the best empanadas?
I mean, I will say my country. I mean, the Venezuelan empanadas are delicious.
Really? Venezuela?
Yeah.
The Colombians are going to have something to say about that. What about the best alfajores?
Argentina.
Argentina, best alfajores. And what about the best tequeños?
Ooh.
Venezuela. By far. Yeah, by far. By far.
Wow.
By far.
What about croquetas? You guys do croquetas?
Not really. I mean, sometimes, but not really.
All right, we'll give that one to the Cubans.
We'll give that one to the Cubans.
What about the baseball players? Who makes the best baseball players?
Shortstops is Venezuela.
Yeah, I mean Venezuela, Dominican Republic, Cuba, Puerto Rico. I will say that.
All right, so it's a tie. You're giving a tie for this one.
Yeah, but I will say Dominican Republic. Yeah.
All right.
What's your favorite Venezuelan dinner? You have one dinner. What is it?
He loves arepas.
You don't have arepas for dinner.
I know.
Yeah. We eat arepas for breakfast or dinner.
Oh, but you're stuffing them with all kinds of stuff.
Yeah, like with avocado, chicken, mayo.
So is that your favorite dinner? Arepas?
Yeah, I love arepas, man.
It's like a Venezuelan taco.
Not a taco. Like no, yeah, kinda.
Like a Venezuelan dumpling.
Everything's a dumpling.
Stop it! You're making me hungry. Stop it! It's too early to be eating. All right. Thank you to Alfonso. Thanks to Louis. Thanks to Jeff Hirsch for stopping by. Thanks to everyone in the chat for hanging out. If you want to do me a small favor, a very small favor, and just hit the thumbs up button. It helps more people find the show on YouTube, and I appreciate that. We appreciate that. It's Friday, obviously, so last morning show of the week. Have a great weekend. We'll be back next week. In the meantime, go make some money and enjoy your weekend.
Bye, Banks.
Adios.
Bye, guys.
Bye, everybody.
I can't take no loss. I don't even know what it costs. I hit the ground, then it goes.